Hi, this is Vijay Mamvani here. I hope you're enjoying your trades, your investments in the market, and the market is treating you kindly. In this video, I want to answer a few queries and share my secret sauce about why I have been advocating caution from 1st of September, reinforcing that on 9th of September. And of course, the last one was when I warned you about a whole lot of IPOs coming in. The IPOs was more from a financial point of view because the markets would suck out liquidity from the secondary markets, and therefore it was a no-brainer. But the 1st September and 9th September videos were all about behavioral technical analysis coupled with statistics. So a lot of my viewers have asked me questions, and hey, I love your questions. I don't mind sharing my knowledge with you at all, so please keep them coming, and I will attempt at best to the best of my capabilities to answer your queries here. So the one query that has been coming in significantly often is about the MWPL. Now, in case you haven't really joined Equity Masters Telegram channel yet, I would strongly urge you to do so. It has a handle, Equity Master Official, wherein I put up 3 updates every day, Monday to Friday, about some statistical inputs that my homegrown statistical trading model throws up. In that, one of the things that I cover is the MWPL. Now, a lot of viewers, especially people who've joined the Equity Master Telegram channel, ask me, what is MWPL, what is its significance, and how does it help you and me to trade better? So, here goes, and you may basically try this system out over the next couple of trading sessions when I update the MWPL figures every evening. MWPL stands for Market-Wide Position Limits. Now, a lot of times you would have come across updates on your trading terminal by way of flashes when your broker tells you so-and-so stock is under a ban period because the MWPL limits have crossed 95%. Now, what does it really mean? You see, every stock has a limit set by SEBI beyond which traders, speculators, players, call them what you want, cannot create more positions. Now, let's assume that a stock X has a limit of 10 lakh contracts. All right. Now, what really happens is the MWPL absolute is 10 lakh contracts. Now, traders will obviously build positions depending on their expectation from the stock. So, the higher the MWPL, the more expectation there is from the market in that particular stock. Obviously, MWPL is highest in the most volatile stocks because people expect the prices to thrash about or move about a lot, and they are relatively lower or subdued even in single digits in stocks that don't really budge or move too much. Right? Now, the reason why I have been advocating absolute amount of caution from 1st of September onwards was I took a list of MWPL of all the futures available in the market. And then you take an average of the overall market. I found that the MWPL, and I have a historical database of the MWPL that has been prevalent at various price points spanning back a couple of years. I found that the MWPL was within kissing distance or sometimes even surpassing the historical price band. Now, band is the lowest and the highest. Obviously, after expiry, MWPL tends to fall because a lot of positions get squared up. And as we proceed into the new derivative cycle, you'll see that the MWPL starts going higher and higher from the lower end and going into the upper end. But many a times the MWPL was actually going above the historical upper band. Now, what does it indicate? It basically indicates that the traders had a huge amount of expectations from the markets. What happens when the markets have excessive expectations? You tend to overtrade. From a behavioral finance point of view, it basically means that you overtrade. Now, when you overtrade, you tend to be jumpy, you tend to be nervous. So whenever there is a little bit of volatility in prices, a lot of traders tend to exit, or they get thrown out by brokers for want of mark-to-market margin. That causes extreme volatility and thrashing about in prices. In very simple layman's terms, let me ask you a question. Have you seen off late, especially from 1st of September onwards, when you're making money in trading, and on the long side, money might have come relatively easier as compared to the shorts because the market was still rising. You were making 30, 40, 50 paise per share in the futures, or maybe a rupee, 2 rupees per share in the futures. But whenever the market tanked, you were losing 3, 4, 5 times more than what you were making so far. Has this happened to you? If this has happened to you, you can thank the extremely high MWPL readings. Now, wherever there is excessive amount of expectation, whenever these expectations are belied or they are let down, there is a great deal of pessimism, at least in the short term. So what you're basically seeing is the emotional flapping about or the fluttering of a whole lot of short-term traders who are getting frustrated in the market, and this frustration is showing up in the numbers. You know, the best thing about our markets of today is that they are electronic and they leave a digital footprint in the sand of time. Each and every transaction changes some number somewhere on your trading terminal, and as long as you train yourself in the language of mathematics and numbers, you can see what the market is actually trying to convey to you. I feel that these numbers are actually trying to talk to you. As long as you hear the language of these numbers well, you have basically a significant edge over the other traders who are not listening to these numbers. So from 1st of September, what I noticed was, and this I said in the other videos, that there is a deceleration, which means a slowdown in the acceleration of the up move. So I saw momentum was slowing, and secondly, I saw MWPL was rising. So in spite of the fact that prices were not rising fast enough, traders were building up more and more long positions, expecting the prices to continue to move as fast as they had done in the past. But you know, when you keep on loading a tired horse with more and more burden, no matter how hard you whip it, it cannot run faster because it is tired. This is what I anticipated, and this is what actually happened last week when the markets fell. Both the indices almost fell 4% on a day-on-day basis in spite of the smart rally on Friday. Now, can you do or can you use the MWPL by yourself to learn this as a standalone trading system? I think no metric can be a single standalone be-all and end-all metric, but I would swear by the MWPL along with a few other statistical tools which I think give me an additional advantage, and which my subscribers to the weekly cash alert service will agree with me that gives us an additional advantage over traders who don't use so. And is this system very easy? Remain assured, Vijay Bambwani will not tell you anything that you cannot master as long as you are an 8th standard pass school graduate. If you've cleared your 10th standard, you will get this in a jiffy. The beauty of trading systems is that the most profitable trading systems are the simplest ones. They are easy to grasp. And more from me on trading systems, especially statistical ones, which you can master to garner an edge over your fellow traders. On this promising note, I'll bid goodbye to you, but not before requesting you, if you're watching this video on YouTube, do click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think of this video and what you would want me to record next. Help me reach out to knowledge-based investors and traders who would want to imbibe a 360-degree worldview of the financial markets by recommending my video to your family and friends. Do take very good care of your health, your family, your friends, your trades and investments. Vijay Bambwani signing off for now. Have a very profitable day. Thank you for watching my video. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.